I bet you $100 you're scalping the wrong way. And this is why you keep blowing your account up. If you ever taken a scalping trade that looked good but instantly got stopped out, this video is for you. See, I took a $4,000 account and flipped it to $40,000 here on YouTube. I even took a $1,500 account and turned that into $30,000 here on YouTube. And even right now, I'm showing you guys how I am taking a $100 account to $100,000 step by step, live stream on YouTube as well. So if you're still scalping like 90% of these traders, you're going to fail. So stick with me for the next few minutes because I'm about to show you the actual mistakes that are stopping you from being a successful, consistent trader. A few years ago, I was exactly where you are now, over trading, chasing the trades, blowing accounts left and right. We all know scalping is one of the most used ways as a retail trader to trade, but I realized there were 3 mistakes I consistently made, and that's exactly what we're going to be talking about in this video. Mistake 1, chasing every candle. Tell me if any of these sound familiar to you. Market moves fast, you jump in, instantly stopped out. Another move, you jump in again, boom, another loss. Pretty much by the end of the day, you took over 20 trades and you are down pretty damn bad. And the reason why this happens is because you're chasing candles instead of letting the market come to you. You would rather let the market control you instead of you control the market. So the logical breakdown is, feel like you're catching momentum, quick adrenaline rush. The cons in jumping in is 90% of the trades pretty much fail. You're entering without confirmation, which we talk about 3 confirmation. That's what we're going to talk about here. You have no clear exit plan. You're just all on an emotional roller coaster. You're scalping reactionary moves rather than predicting setups. So just remember, you need to be ahead of the market, not behind it. The goal isn't to chase it, but to anticipate the actual setups. And this is what brings me to the next setup, number 2, which is the worst of them all. Entering too late, FOMO entries. You see a big move happening and your brain says, I can't miss this. But the second you enter, boom, the market reverses on you. This is pretty much when you see candles is just going up, going up, going up, going up. And you're like, this is the perfect setup. Let me buy it, because you feel like you're missing out on the setup. In a lot of my other videos, and also this video, when I talk about PNH and PNL, this is where the big institutionals like to use these zone areas, but to actually give you the prediction of when a reversal is going to happen. That's where you guys want to actually come in a market. Keep that in mind. FOMO is the biggest assumption for traders to fail their account, not grow their account, and lose all the money. The cool thing about pros with FOMO, and I know why a lot of us do it, is you feel like you're jumping in with momentum, and that's probably one of the reasons why. It's a quick in and out trade, of course, but here's the cons. Price is already exhausted. It's overbought, oversold. I know we use the RSI to determine overbought, oversold. I don't even use that anymore. I use the Fibonacci to give me the actual oversold and overbought areas. You're buying into liquidity traps. Smart money is unloading their positions. The market needs to breathe before the next move. You can't expect the move to go up, go up, go up, go up, go up, and then you buy here not thinking that the market is going to drop, because the market will never just dramatically go up. The market always moves in waves. You're entering at the extreme of a move. You're playing against profitability. Winning trades wait for the market to come to them. So once again, you wait on that retest, and then when you get that retest, that right there is your entry. Now, the next mistake is even more dangerous, and this is the reason why most traders blow their accounts in days just from this one, and that is over leveraging and blowing accounts. The one that is the killer account of them all. Now, there are some pros when it comes to over leveraging, because I've done it in a couple of my live streams where we over leveraged an account and actually grew it to about 200% in one day or 300% in 2 days. But there's more cons to that, and this is why we're going to not do this when it comes to consistent growth. So the pro is, if the trade works, profits are huge. Of course, we know that. Feels like you're scaling up quickly. You take $1,400 into 30K in 3 days. That is exactly what I was doing when it came to that account growth. I was over leveraging that account. Now, not saying that that's what I want you guys to do. That's not consistent at all. I tried to even after that and absolutely did not work that time. So all I'm getting at is, the more consistent we are, the better we can make profits consistently. Now, here's the cons, and this is why we're not going to be doing this anymore. One loss wipes out weeks of when you're taking a profit from one and to another, and you got it from $100 to $1,000, and it took you that whole week, mentally stressing you out too, right? And then one trade, you just blew it all in like seconds. I absolutely hate that, and I don't want us to deal with that. So this whole emotional stress ruins our entire making decision. Prop firms and brokers love when traders over leverage because this is how they make money. So we need to let prop firms and brokers hate us because we're not going to do any of these because we understand what's going on by watching Solo's videos. Scalping is about consistency, not one lucky trade. The goal is to survive long enough for your strategy to work over time. Now, if you ever made any of these mistakes like I did, let me know in the comments below. I'm actually interested to hear from you guys and what you actually go through when it comes to over leveraging. Now, what we're going to do is we're going to go into the right way to scalp. Number one, we're going to trade only high probability setups. Number two, enter in the right moment, no FOMO, using our PNL and PNH methods. Remember, this is where we will get in, not when the market is up here, because sometimes you feel like you got in too late, or even if you got in because of the momentum, this happens. So we're going to know exactly when not to get in the market, but when to get in the market using our PNL and PNH methods. Also, number three, proper risk management. We're going to make sure we have proper risk management set. When we're scaling the account, we have to pay close attention to aiming for 1 or 2 rewards if we want consistency. 1-on-1s is fine, no problem with it, but keep in mind, we are growing a small account, so it is better to risk less and gain more reward. And that's exactly what I want to teach you guys in this video. So here are the 3 things that we are going to need for our core model to work. First one is going to be our EMA, our non-EMA, and then we're going to use a 113 EMA for our entries. Second is going to be our Fibonacci for entry setups and exit setups. Here are my actual settings for the Fibonacci. You guys can take, pause the video. And then the final is going to be our 3 confirmation rule. For those that don't have this, this is my 3 confirmation playbook. If you guys do want this, just comment the word playbook down below and I'll be able to send you the link. But other than that, this is my 3 confirmation playbook that I consistently use on any strategy or any method. But now let me show you guys what a perfect setup looks like when it comes to PNL and PNH methods. The first thing is you have to identify a range. If you don't know how to identify a range, I have numerous videos that I did pin down below. Also in our TWS community, we will be talking about this a lot, how to find range and all of that stuff. In addition to that, we also are doing a $100 challenge where we're all taking $100 and scaling it together. So if you guys are ever interested in that community, you can check that link out down below, and that will be coming soon in April. Now, other than that, find a range. Once you establish the range, this is the fun part. You don't need to worry about FOMO ever again, because what the Fibonacci does, shout out to Fibonacci himself, is it gives us this psychological mindset of where price could potentially be at. And regardless if it happens or if it doesn't happen, we're going to rely on this as if it is going to happen. So once this range has been established, all we're using are the red lines to give us what we call our potential new highs or the potential new lows, depending on the direction of the market. If the market is going up, we're going to be paying attention to the potential new highs. So this zone area is where banks, institutionals see a lot of the retail traders putting their pending orders or stop losses in this area. Just imagine you were in some hedge fund and this big computer showed you just a bunch of boxes that were light color to darker color. The darker color means this is more volume in there. Lighter color means less volume. If this was the darkest color right here, we kind of now have an idea where the market makers are going to stop, take out all the orders, and maybe even do a little bit of drawdown or maybe do a little bit of retesting and then continue up. Regardless, all we know is the PNL and PNH is the potential new high or potential new low, and we use that in our favor, because if we're trying to get in because we have the fear of missing out and the market is right here, we know we're not going to get in the market because we established that this is the potential new high. Potential new high is just as simple as a high. We have an idea in our mind that this is something we're not going to get into. Now, the cool thing about this is, remember, I said earlier that the market will always exhaust itself. It will never constantly go up. So if we catch the pullback at the right time, we enter here, and then we can use that potential new high in our favor as a take profit method. So if you're trying to take trades and you're looking to long a position and go for that 1 or 2, hope that that 1 or 2 aligns with that PNH level from your entry, and then your stop loss just always needs to be pips away from the previous lows. But this is the method that will consistently work out. Of course, you're not going to win every single trade, That is not the goal here. And if your mindset is set to winning every single trade, then you're gonna fail. There will be losing trades. There will be times where you do get stopped out. Maybe your first trade after watching this video, you do get stopped out. But try it again, try it again, try it again, and even back test it beforehand, because this is what I consistently use on all of my videos, all of my accounts. Right now on this $100 account, we're currently at $276, which is leaving us at a profit of $177, which is a total ROI of 100%. The job is to consistently do this. Now on my other $100 account, we're currently at about $4,000. I want you guys to really understand something here, that this could be done. You just have to understand that the end goal here is to mentally prepare yourself. And when you mentally prepare yourself, you're all set. Now let me show you guys some live examples. This is assuming you found the range and know how to find a range. And if once again you don't, TWS community and got videos pinned down below how to find a range. Once you find that range, you draw out your fibs from A to B, and assuming that this is our zone potential new low right here. So all we're doing is saying, if the market is telling us this is where the reversal is going to happen, this is where we're expecting the reversal to happen, I got time to get in trades. I can either get in here, I can get in here, I can get in here. Now, I mentioned the 9 EMA and the 113 EMA. When price is crossed from the moving averages, once it reverses, that is your confirmation one. The second confirmation is you're going to wait for candle to close past both moving averages. That's confirmation number 2. And third is you need the engulfing candle, which is bigger than the previous candle, and that is confirmation number 3. After you establish all 3 of these things, this is a solid entry for you. So let's say that looking at BTC, and we're in a nice sell position because engulfing candle, it did close below both moving averages and it crossed over. We can now put our stop loss right about here, and we can go for that, hopefully 1 or 2. As you see, this all falls in a 1 or 2 zone, and we're in a solid trade. The cool thing is, let's say you might have missed out on the setup and you're like, damn, I want to get in a trade, but you're like, I don't want to have FOMO. PNL will help you right here. You now know this is where your potential reversal will happen, also known as your potential low, which is just your low. And seeing that had happened here, you clearly see that this right here, potential new low, boom, tapped into that. And now market reverse, but it still dropped because this is still a downtrend. This is how simple the strategy can be, and this is how simple you can make the strategy. But if you want to complicate it for whatever reason, that's on you. This apply and this works for me for years. I've been trading for 6 years, learned Elliott wave, learned whack-off theory, learned SMC, learned ICT, learned all of these different concepts, but I always went back to double down into what worked. What this does is creates the 3-man standing strategy that you guys, most of you know about, and that is part of whack off, part of smart money concept and Elliott wave, all put together but super simplified. So once again, if you want to stop scalping the wrong way and actually scale your account and make profits, subscribe to this YouTube channel. On our YouTube channel, we do go live, and I do show you guys me consistently growing small accounts and just consistently working on prop firm challenges and working on my actual prop firm account. But if you do want to practice this strategy live with me, join TWS, which will be going live in April, and you guys will be able to see all of this exclusivity that we're going to do. Also, we all will be taking a small account and growing it together as well, but only exclusively through TWS, which is the waitlist. Join that down below. And that being said, you need a real plan and not just randomly trading. So I'll see you guys in my next video. Let's get this back. Solo. I'm out.